Good afternoon, everybody. Unfortunately, we only have 25 minutes, so let's get started. This is about digital transformation, which now is not a new subject. In fact, it's well on its way. I did a study a few months ago, and I remember I looked up 20 years ago who were the 5 most valuable companies in the world. And they were all of the big giants, the General Motors, the General Electrics, the Exxons, the Walmarts. Today, who are they? Apple, Alphabet, Facebook, Amazon, Microsoft. Really, only Microsoft was the only company in business 20 years ago. I think Zuck was a young teenager. Larry and Sergey hadn't gone to Stanford yet. And they've built the 5 most valuable companies in the world in that 2 decades. Apple, 20 years ago, had 3 months cash in the bank. Total transformation. I think if we come back here and do this in 10 more years, I wouldn't be surprised if the top 10 or 15 companies that are on that list are companies whose names we don't know today. Now, I'm honored to have 2 really great people to talk about what they're doing with digital transformation. Sébastien, you run the largest hotel chain in Europe, Accor. It's probably fair to start off by saying, talk about Airbnb. How do you see it, and what's going to happen?
Gosh, I thought we were going to be talking about online payment. Airbnb, favorite subject. It's not my favorite subject, by the way. What can I say? I've been saying for a long time, a lot of respect for Airbnb. I wish Accor could have invested and created Airbnb, and we simply missed it. That being said, we decided to wake up and we decided to understand why do they exist. And they exist because they have clients, and their clients want something which we did not offer, which is lower price, bigger space, and more unique. And we, as hotel companies, been imposing on our people square meters, constraint, high price, and standards. So if you want to basically combat with Airbnb, you have to think differently, you have to adapt, which is why we have launched a brand new concept called Joe & Joe. And Joe & Joe, which is the first hotel opened 3 weeks ago in Osgore, which is south of Biarritz, north of Biarritz. And now we're no longer selling a bedroom, we're selling a bed. And there is no partitionings anymore. Everything is on wheels. So you have your own bed, and depending whether you're coming 2, 3, 8 people, you make your own rooms, the space you want. The only thing we could not do is to put the toilets on wheels because of the plumbing. But all the rest, so you can go and you have a bed which costs you 16 euros, 20 euros. So you have the space, you can meet people, it's very unique, and you don't have to wait for the keys for somebody else to give it over to you when it's raining. So it's one way to do it. But at the end of the day, we just have to realize for our core as well is 60% of my clientele is over 50 years old, which is good because they're going to live until 90 years old. But only 10% is below 30 years old. So we'd better wake up if I want to have clients 20 years from today.
The most amazing thing that I know about Airbnb, and I actually didn't know this till last week, I've never stayed in one. My daughters have. They tell me that their friends are buying homes for the sole purpose of making them an Airbnb residence because it is a good business. And evidently a micro-industry is being created within that whole world.
Well, it is a real business. And let's not be confused here. And I don't know exactly what the percentage is, but likely to be 40% of Airbnb owners have multiple offers. And it could be merchant, real estate merchant, real estate advisors. They actually own the entire building, which is only Airbnb. So no one ever lived there, and the photos are faked. That being so, I'm actually not, anybody who has a house, an apartment, wants to put it on Airbnb, I'm fine for it. Anything which conducts a business out of Airbnb should basically belong to the same rules I'm abide for. This is the only thing I'm asking, that we have a level playing field. But again, I don't hide behind legislation. Confront what they do well and do it differently for the same purpose or the same price.
Good. Let me bring John in here. John, you have built an amazing company, one that I told you earlier I wish we had invested in. One of my favorite questions to CEOs of companies like yours, what was your founding vision? What were you thinking about that caused you to build Stripe?
Our vision for Stripe is to increase the GDP of the internet. And what we mean by that is, you'll see a lot of discussion here today of all the digital economy and digital companies. If you actually zoom out and look at it at a macro level, 5% of global commerce happens online. The remainder is offline. And so we're much more interested not in that 5%, but in the remaining 95% that for whatever reason isn't online. And the reason it isn't online, by the way, is that the infrastructure we have when it comes to payments, business infrastructure, economic infrastructure, frankly, it's traditionally been pretty bad. That's what got Patrick and I started here. We had tried to start an online business, and we had run into the impediments working with financial institutions. And so we said, there must be a better way. We set up Stripe to let, basically businesses online accept money from any customer in any currency around the world, and increasingly provide the software they need to run that business. We don't think that should be, we think that's pretty basic and is a pretty important ingredient in the fundamentals of the internet economy.
This is a bit of a tough question, but why aren't the big banks responding more rapidly to this whole threat that you and people like you pose to the restructuring of the financial industry? You just keep building momentum.
We do, and I think there's maybe two things at play. One is Stripe is not a total ground-up rebuild of the financial system. One of the things we do is we realize businesses want to reach customers. They want to reach customers in the way that exists today with credit cards, with bank transfers, things like that. And so we are not a cryptocurrency company or something like that. We work within and on top of the financial system to provide a much more unified layer and a much more internet business-friendly layer on top of that. I think the second issue at play is that traditionally financial institutions did not either have the mindset or the skill set to be able to serve internet businesses. In that, we're talking here today about, you mentioned Airbnb, about platform economy companies. They have very different needs when it comes to payments than a traditional e-commerce company. They're thinking about paying out funds, they're thinking about managing, their marketplace sellers, and there was no way to do that with a bank before. And I think, to the discussion of how large companies respond to the digital, the disruptors, if you have a mindset of we're going to stay doing what we're doing, that's really dangerous. If you're actually customer oriented and you realize you need to change, you mentioned the companies that were the big five, previous to 10 years ago. You now see actions like General Motors buying Cruise at the self-driving car company and investing in Lyft. You see Walmart buying Jet.com. And so I think you see companies starting to realize that they need to be taking this disruption more seriously.
Yeah, that's actually a really good point, and I want to drill down on it a little bit. Have you said publicly how many people you employ?
Yeah, we're 750 people.
750? What's the average age of your engineering staff?
Oh, I don't know off the top of my head. It's an engineering workforce. It definitely skews younger.
It's young. So in Silicon Valley today, where I live, when we looked last quarter, we have 85,000 job openings that we can't fill in Silicon Valley companies. And there is in fact, I didn't know this. My daughter just graduated a couple of years ago from Stanford. She went to work for startup. It got sold. She's doing her second startup. She asked us what to do about salary. We told her, take a low salary and get more equity. And she picked a number. And then she came home a week later and she said, Dad, I can't do that. The number was too low. I said, I'll tell you what it was. It was $5,000 a month. And I said, why can't they pay you $5,000 a month? She said, because the California minimum wage law for computer engineers is $85,000 a year. Yet no company in Silicon Valley will pay an engineer that low a salary, as ridiculous as that sounds. And we're sitting there with 85,000 openings across our whole industry, if you will. So how do big companies, other than buying companies, get the talent that they need to do something?
I'm curious to hear you go first. You run a big company.
Yeah, you know how many people we hire a year? 80,000.
And what's the nature?
We lose 50,000 people a year, so net it's 30,000 out of a total of 260,000.
So you keep 3,000 new employees a year.
30,000.
30,000.
So, and the average age for our core is 42 years old. 65% are women. But not that many are engineers. But it's a big number. If you really account for Tech, Expedia, and Booking, they have total together 28 plus 22,000 employees, 50,000 employees. Market cap, $120 billion together. You take Marriott, Hilton, Hyatt, Intercon, Accor, Choice, Wyndham. Altogether, it's less than 120 billion. You know how many employees we have? 2.2 million. Tells you quite a bit. Doesn't mean we're going to die. Just means we need to adapt, and you need to do something which is not evident, but it's common sense. There's two things we have that the digital companies don't want to have. I have capital intensity, labor intensity. I have 4,200 hotels in the world, which is cost me $120 billion to build and to manage. And I have 260,000 employees to take care of. But since I have it, why don't I basically mutualize that physical asset, those addresses, the expertise of my 260,000 at the service of enhancing quality of life for people on a day-to-day basis. Amazon, they need me to actually deliver packages. I'm the only one on earth when I'm open 24 hours 7 days a week. And we only service the travelers. Why can't we wake up and say, let's open the doors of an AccorHotel, not for somebody only getting rooms, because if you happen to live in New York, you're not going to be staying in New York. But you may need my address to drop something for somebody to pick up at 3 a.m. in the morning, because I'm the only one who can do this. And you know my address because you go by my hotel every day, but you never stayed because you don't need a room. So the physical content, the labor intensity, if you make it and offer it to the billions of people who do not travel, which is 6 billion, you probably can make a fortune. And the digital company don't want to do it because they don't want to invest.
So let's take your 220,000 people and let's look at the technologies that we have coming from artificial intelligence to robotics to mobile devices. Tell me what the Accor hotel room 10 years out looks like and what kind of, in effect, efficiencies you'll get because you won't need that many people to run a hotel at a quality level.
Well, it is. Internet of Things is today already devastating some of our industry. Anything which has to do on maintaining the rooms, now you spend less time because all the objects are interconnected, so you basically have a red light flashing if you have to repair something. So you don't need as many maintenance as you've needed before. You can probably do the beddings, the linens could be done by a robot. I mean, you've talked to me about it, what happened in Japan. The biggest difficulty for a company like me is not to shy away from new technology, but to be very conscious that you may have too many people in terms of actually what you may need like 10 years from today. So I've been saying publicly, I have a third of my employees who are extremely good and wants to participate into the digital mutation. And they're very good and they could be locomotive. I have a third of my employees, they understand the need and the transformation. They don't know how to do it, but they're happy to be transformed and they're happy to be trained. And I have a third of my employees adamantly resisting any changes, in denial, don't want to be trained, and I have to take care of them. So the biggest difference between him and me is agility. He can start on a blank sheet of paper, you construct something, you don't have any norms, standard, history, personnel. I cannot move as fast as he is, but I have skill. and I have obviously market penetration. So to answer your questions, yes, the digital is going to be transforming my company. It may be at the expense of my workforce, but as a CEO, I need to find the solution and not to put those people on the street.
John.
I think large companies, in a way, get a bad rap when it comes to digital transformation. And here's what I mean. The examples of small companies coming along and disrupting a large company are very salient. Everyone remembers them. Amazon coming along and displacing a large number of retailers really stands out to people, and people remember it. When a large company executes really well and adapts to the changes that are coming and has the user-centric mindset, like you were saying with the users want more space and more uniqueness and things like that, then it doesn't grab as many headlines and people don't notice because it's a large successful company continuing to be large and successful. We notice this phenomenon where Stripe is used by small startups just starting out and starting to sell globally, and by large companies who are using it to transform themselves for the digital era. And so you see Uber getting all the headlines. Meanwhile, we have Daimler on Stripe building a ride-sharing service, Taxi Bleu building payment apps and things like that. When the large companies do it, it tends to go relatively unnoticed because they're continuing to execute on their business, whereas the new companies have quite a lot of novelty. And so I think it's almost the table is a little it's a little unfair for the large companies.
I actually think there's another fundamental difference that I'm not sure how big companies overcome this one, but I told you earlier about working with Jack Welch. And I basically asked him why he invested in my company. And he really said, because you've got a product that I need and I don't. And I thought about it and I said, all right, I'm a little company. I've got 8 engineers and I'm growing it. And I decided that our single core competitive advantage was speed. I could move in the market because I didn't have a big decision matrix. And in fact, I could take our team and change the direction of the company in an afternoon. So the permanent advantage that I see we started something like 500 companies, is the ability of those companies to run fast. And what we tell them is, if you ever partner with a big company and they slow you down, run in the other direction as fast as you can. How are you going to make Accor run faster? By
being here, by teaming up with as many startups as we could. I've been in the job for only 3 years. We've been engaging with 60 startups. We've been investing in 25 startups. It's almost once a month for the last 2 years. Some of them we have 20%, some of them 49%, some of them we bought 80% or 100%. Each of them have to remain autonomous. Each of them had a technology, a new business unit, a new idea that we did not think of and we could not replicate, or if we do, it's going to take us 3 years and we're going to be late. So the biggest difficulty for the big companies is not really to leave them autonomous. The biggest decision is don't go with consensus. If I'm going to be asking my executive committee what they think of this new idea, they're going to kill it because they haven't thought of it before and they hate it. So you basically have to understand your failures, and the biggest word which makes it happen in success is respect. I want my people to respect the startups, the entrepreneurs, even though they're going to be younger and they may be richer. And I want the entrepreneur to respect the old companies because we may not be as smart, but we have experience. So if you respect each other, it's going to work. The rest is different formulas depending on who the guy is.
It is totally different. They're totally different cadences. Expanding an existing business that has product market fit versus exploring a new product area and getting to product market fit, getting something off the ground. And the problem you have is when you have a small startup in that mode that maybe is acquired by a larger company and they're operating on different cadences, that's a recipe for disaster. And so the companies that can do this really well year after year are the ones that can have an established business on an operating cadence, optimizing that while not, while not strangling the innovation and cutting that off. And so you have to be able to, as a company, operate in these two modes simultaneously, where you have some products that are post-product market fit, they're off to the races, and some products that are just getting started.
You actually said a super important thing. We have sold, I'm sure over the 34 years we've been in business, 100 of our portfolio companies to bigger companies. And we care a lot about what happens to them. I mean, we treat these companies, we've invested in them. Sometimes when a big company buys one of ours, we're actually sad because the brand goes away. But your word respect, I think, is super critical on both sides. Because the first point of failure is you've bought something you need, but you have two different cultures. And how you manage to respect both of those cultures is, and the people who do that well, and I'd pick John Chambers at Cisco as a good example for somebody who's learned how to take a team and let them run, but move them towards the Cisco culture without destroying them.
But you know, Joe, at the end of the day, and I spent yesterday here 7 hours. Gosh, was it hot. And I've been telling my board of directors for the last 3 years that Accor has been conducting its business for the last 50 years, 5-0. In 5 years from today, a third of Accor profit and revenues will be coming from businesses, initiatives we've never entertained for the last 50 years. And that 30% of profit is coming from those people behind the curtain here, no doubt. I'm going to be continuing growing my core competency, but I need to endeavor into client-centric database, CRM, multiplying touch points. I mean, you know the trick, you know the trick. I have a relationship with my clients in the hotel industry 3 times a year. Facebook has a 7 times a day relationship, and Laurent is here. So I need to go from 3 times a month to 3 times, from 3 times a year to 3 times a month. I need to engage into other activities with likely the same clients if I want Accor to survive and grow. And those guys are around me.
I want to come back to this separately, but I love being on these panels because I always get a good idea. Your idea about using your physical properties for something besides beds is a giant idea. And it's spinning in my brain, so we're probably going to talk later.
Keep it between you and me. Don't talk to my American peers. So.
I promise. All right. Are there any final comments here? We've got another minute to go.
I don't know. I'm pretty exhausted from the day. I got into Paris yesterday and spent a lot of the day meeting with French companies. And I mean, I'd be curious for your perspective. You spend a lot of time here, but I'm kind of amazed at the difference in the French ecosystem between now and say 5 or 10 years ago. And I think that's typically the thing that you expect people to come to conferences and say. But we went and quantified it. Stripe users raised more funding in the past month than all French startups raised in 2011. And so it really is striking day and night the difference between today and 5 or 10 years ago in the ecosystem here. That's why I've started coming back more. I'm pretty excited by the visa stuff and the government expanded that we heard about yesterday. I mean, what do you guys think?
You know, I guess I was so happy to be on a panel with you, John. We've never met. The online payment for Accor is between 12 and 15%. It's ridiculously small. It is 40% of my digital portal, but it's only 15% of my entire business. I'm absolutely convinced that we can go from 15% to probably 60%. I can make you rich, you're going to make me rich. I have one biggest problem, is my merchant model is done per hotel basis. I have 40 to 100 people taking the cash from different clients. If I want to go online payment 60%, I need to centralize all the merchant model within Accor and me redistributing net to the 40 to 100 hotels. This is not an easy, it's a one-way street, but that's worth pursuing.
We've got to close now, but as I've said to a number of government leaders, and particularly here in France, entrepreneurship is a French word. Thank you all for being here.
Thank you.